Um, Today's call is also open to the public. So welcome to the SMT community. But before we proceed, just a standard disclaimer, and as the title of the meeting itself suggests, that it's Monday evening entertainment. So all content in this presentation is for information and educational purposes only, and is not meant to be any trading or investment advice or any other advice for that matter. Please do your own due diligence or seek professional advice before acting upon or relying on any information provided in this presentation. If you could acknowledge by typing either Y or yes, that will be great. Okay, thank you so much. Okay, let's get started. So quite an eventful past 7 days. Lots of things have happened from a market's perspective. So what we're going to follow the standard format that we normally do, and like we looked at even earlier last week, is that we look at some of the facts or some of the key drivers that have changed in the past 1 week. We'll see what is the implication of those drivers purely from a market's perspective. We'll examine what the sentiment is, and from a short-term perspective, and also from a slightly longer-term perspective, what are the other drivers in addition to what's changed in the last 1 week or so. And finally, we'll look at our system. What is the system telling us in terms of the trend? That's essentially the chart that you are seeing on your screen. Okay, we'll as far as a large part of the presentation, we'll try to focus on equities, given the time constraint. But of course, we'll look at quite a few charts in the equity market. Okay, so what's really changed in the last 1 week or so? So it's clearly the weekend news of a U.S. attack on Iran's nuclear sites clearly represents an escalation in the conflict. So that's clearly changed in the last 1 week. Meanwhile, equity markets, as we see on the screen, are hovering at previous highs. So that's again where the market is approaching very key resistance, and at the same time we are having this at least near term or at least a risk from a market's perspective. It's uncertainty, and markets don't like uncertainty. So that's clearly one of the important drivers this week. Market breadth, if we look at the number of stocks which are above 200-day moving average, we'll see once we come to the charts, is also around 40 to 50%. So even though the index is at record highs, the participation or the breadth of the rally or the number of stocks participating in that rally is clearly not as much as it was in January, February, or at the start of the year. So we'll have a look at that, and we'll also look at what the implications are. But this is only as far as facts are concerned, that we are at very important resistance level as far as the S&P 500 index is concerned. And some of these drivers are clearly unfolding as we speak. So what about sentiment? So this is what was the facts. What about the sentiment? Now, clearly, geopolitics is going to be a key driver of market sentiment in the near term, with key focus on oil prices. Now, at least so far, going into the European trading session, the reaction to the weekend news was largely contained and or rather limited in that sense. And some believe that the conflict could be contained. But on the other hand, there are some other views also which suggest that markets could be underpricing some of the potential impact. So that's clearly work in progress. Then it's still, as we speak, things are unfolding, and in coming days / weeks, we'll come to know how this is panning out. But the sentiment is clearly, from a market's perspective, it's clearly cautious. It would not be something like an optimistic scenario. It's still a very cautious scenario. Maybe some optimism may be there because of the larger drivers or the bigger drivers, excluding some of the recent ones that have come up, and we'll see that very shortly. Um, on the positive side, clearly, U.S.-China trade truce and also potential U.S. trade deals with some of its other trading partners has clearly reduced U.S. recession risk, and which explains this sharp rebound that we saw in the past couple of months. So that's as far as where sentiment is largely near term, but also in the background, easing or de-escalation of trade tensions clearly has been a very big supportive factor as far as sentiment is concerned. So it's a mix at this point in time. Now, excluding or moving out or zooming out into a slightly bigger picture in terms of what the key narrative for equity markets especially is that focus now remains on clearly on what's happening in the Middle East, and how contained or how protracted it's turning out to be. So that's clearly a question mark that remains to be seen, and that will be one of the important factors for markets going forward. Overall, reduced U.S. recession risk as a result of easing trade tensions, and U.S. and potential U.S. monetary policy easing also, it could be as soon as July, is likely to support overall risk sentiment. And from a more fundamental perspective, valuations outside, or equity valuations outside of US, are looking relatively more attractive, especially Asia, Japan, or China. So that's as far as the broader narrative is concerned. Now let's go on to the charts as far as what charts are telling us. So as we see on the screen, this is what the Traders GPS system is. Also, by the way, since we are on Traders GPS, there is a free preview tomorrow tomorrow 24th June 2025 at 7 p.m. For those who are interested in getting to know better about what the system is, how it works, and some more details on the system, do feel free to join. We'll just put up the link very shortly. It's free, and do also pass this on, this message on to those who you think also might be interested in joining. It's CollinSeow. Why don't I just type it out for you over here? And there, so this is the website page. You can just go over here and register. It's, as I said, it's free of cost, and you'll get to know more about what the system is. So please feel free. Okay. Let's get back to markets. Okay, so this is S&P 500. As the system shows now, blue candles. There are two colored candles over here. One is red and the other one is blue. So blue clearly suggests when the candle color is blue, it's the trend is up. When the candle colors is red, the trend is down. So clearly, as the color of the candle suggests, and also as you see in this small upper top right corner, is also mode is also bullish, which is what's happening on longer term or higher time frame charts. So the trend is, as far as the system is concerned, it's clearly bullish. Now, as we see that the market is also approaching previous high. So there is some resistance coming up for markets. And as we see, there is also, it's looking a bit overbought in the near term. So resistance plus a bit overbought also suggests that perhaps maybe this could be some sort of a pause, but the trend still remains up. Now, what are the possible scenarios that could play out? Before that, I mentioned earlier about the breadth in S&P 500. So these are, as you see, this is the percentage stocks above the 200-day moving average, meaning the currently about 48 to 50% of the stocks are currently above the 200-day moving average. And you note, um, and we see that in the previous February or so, earlier this year and going into last year also, noticed that about 80% of the stocks were above the 200-day moving average. And also, even prior to that, more than 80%. So what this means is that the greater the participation in the rally, the more chances of sustainability or continuation of that rally. So that's something that has been a key feature. Now, it doesn't mean it is bearish. It could well improve from here on onwards. This is not a, it's not a leading indicator. It just explains what the trend is. So, so far the participation has been fairly average. It's not much, but it could could turn once this the index breaks above. So this is just one noteworthy feature, especially as we are approaching that important high in the index. Okay, what are the scenarios? What are the potential scenarios that could pay out? So one of the important support levels is this particular blue line that suggests, which is the previous, which is the May low. That's an important support in the immediate term. While the index remains above this, the trend is still positive. In the event, if and only if, it's not a prediction, if and only if the index breaks below this, it could imply some sort of a range developing. But going by how the trend has been recently, perhaps some sort of a tapering sort of a pattern has developed, but we've not seen any significant support break yet. So overbought conditions at previous high also is another indication that the market would want to see more positive indications to go to a new level, to go to a new record high. So perhaps that is also a wait and watch kind of a scenario where markets are looking for a very strong positive catalyst to go to a new level. So that's as far as the S&P 500. Let's look at NASDAQ in terms of where we are on NDX. This is NDX, pretty much a very similar scenario, but note the trend is still up, mode is still bullish. So very similar scenario, but like the S&P 500 index, NASDAQ is also approaching previous record high. And as we see, there is some sort of a cooling of momentum as we see on this chart. But cooling of momentum is not necessarily a bearish sign. It can just mean that the market is perhaps just taking a breather. Perhaps the market is consolidating or looking to consolidate, some sort of a pause in the near term, and to before it gathers fresh momentum to move either ways, whether it's up or down. But more likely than not, given how what the system is showing, more likely than not, the trend is up. Let's look at some of the important support levels in the NASDAQ. What are the levels to like? So likewise, 23rd May, which is also similar support, is an important support level also for the NASDAQ index. So both for S&P 500 and for NASDAQ, these are two important support levels. And as we saw, that even the NASDAQ is at a very important previous resistance, just like the S&P 500. So both indices at that, which possibly also largely explains. And as we saw, momentum also, slight cooling off momentum also in the NASDAQ. So very similar in both indices in terms of how it's unfolding, the near-term price action. Let's go to Hang Seng. How Hang Seng is evolving. Okay, so for those who are regular followers on this call, from last year onwards, the team has been highlighting that a base building formation already in Hang Seng, and some sort of a uptrend or gradual uptrend developing. The systems so far, going on to the daily chart, As blue candles suggest, the trend is up in the Hang Seng Index. As you see, mode is also bullish. If we zoom out and go into a slightly longer term picture in terms of how Hang Seng has evolved, so this is what, let's just minimize this, and slightly longer term scenario on the weekly chart. So this is a nice sort of a double bottom that had developed, and slowly from that the market has been able to at least post higher top and higher bottom, and eventually this is turning out to be a nice some sort of a a parallel upward channel developing. So higher tops and higher bottoms is a sign that the trend has changed. So notice, from a series of lower tops and lower bottoms, the trend has now shifted to higher tops and higher bottom. And even if we consider this resistance, which is also this previous support, just around there, the market is attempting to at least break above that level. Once it breaks, looking to break above, the next level could be this channel resistance, or the next level could be this the top end of the channel. So those are some important levels. On the downside, clearly the channel bottom remains a very important support, and as we see, 2 or 3 times tested, but has withstood the test of time. So that's an interesting market to look at. Let's look at STI. Okay. So there we are. So STI also, interestingly, STI has clearly been one of the outperformers in terms of how the rally has shaped up in recent months. No change in the trend. After a brief pullback, the trend has clearly still been up. Again, as we see the mode, which is on the top right, I'm sorry, the font may be a bit small if you're looking on your, or following this on your mobile and not a bigger screen. So sorry about that. But this is on the top right. It says mode is bullish. So that is also an indication that the higher time frame, or the slightly longer term time frame on the weekly chart, also the trend is bullish. So STI also no sign of reversal yet. Let's look at okay, so here likewise. So what's changed in STI, and let's look at slightly longer term. And as we see that resistance that was held in the last few years, maybe more than a decade, that resistance has finally given way. And even that, and just as that has happened, there was a brief pullback, as we know, due to trade tensions, but quickly the index has been able to recover. Yes, this rally has been very sharp in the last more than a year, 15 months, 18 months. Yes. So perhaps maybe overbought conditions would possibly mean that this is how that there is some sort of a cooling off period or some sort of a pause developing. But the fact that the market has moved to a new level, and as we see that mode was still bullish on the STI, clearly suggests that the trend is up. I'd also want to just go on to crude oil, because that is again a key focus for markets, which is where we started from. That crude oil is an important driver also in the near term, how crude oil prices are moving. So for example, as the screen shows, this is crude oil futures on Trading View. I think it is a continuous contract, if I'm not mistaken. It's just not one single contract; it's a continuous contract. So it's not a specific security. Okay, so as we see that a nice downtrend channel was in force all this while, and also we see that there was a nice support, also horizontal trend line support, that sort of restricted a clear breakout on the downside just a few months ago. So that was also a nice double bottom formation um, and the target was met subsequently. But now we are approaching at the top end of the channel. So maybe it's in this previous highs also there. Maybe there is some resistance, possible resistance, and on the daily chart clearly overbought conditions because of the sharp rise that we've seen in the last few days or few sessions. So what are the how could it play out? What is the scenario likely to be, or how is it likely to unfold? So a couple of scenarios here. So one scenario is that this resistance is strong enough, which is converged resistance, which is the downtrend channel plus the previous high, that is proves to be strong for the market to break, and it just consolidates below that and comes back in that channel, which means that it's some sort of a business as usual story for crude oil, given that this trend is prevailing since 2 years. So that's one scenario. The second scenario is that the market is able to break that, and a break above that could push towards the next resistance, because the next resistance is only over here, which is towards that 95. It's not a target. I repeat, it's not a target. It is just the next resistance that is shown by the charts. So once this is broken, it could open up the way for the next resistance towards that. So that's the second scenario. And on the downside, or the bearish scenario could be, so that could the a break of resistance could be a bullish scenario. But in the event the market is fails to break this resistance, and the third, which is the third scenario, that we go back to a retest of that low, in that case the probability of a break now in the second time would be quite high, meaning that if we fail to break, so we come back, we go briefly over here, and then we sort of come back over here, which is a retest of this particular convert support area, which is mix of this area. In that case, if that happens, then clearly the path of least resistance would be down for crude oil. So those are some of the two or three scenarios in terms of how it's unfolding. On the daily chart, as we saw, that clearly overbought conditions, um, RSI close to 80 levels, which is quite high. Now, so those were the two or three scenarios which I wanted to talk about in crude oil. Lastly, let's look at one more market in terms of what is the FX market telling us. So let's just look at the US dollar index before we call it a day. So as we see, the US dollar index, in fact, today, dollar yen is up quite sharply, and some of the other currencies also depreciated versus or fallen versus the US dollar. And one of the key reasons is that US dollar has been very oversold all this while in recent weeks, for various reasons, as we saw earlier in previous last week. Uh, the the downtrend has been quite sharp for US dollar. And as we see that there was a nice divergence also shaping up in the US dollar on the daily charts, which suggested that previous support, oversold conditions, positive divergence emerging only meant that, okay, there is some sort of a pause developing for the US dollar slide, which is why we are seeing some sort of a pause taking. Maybe there could be some more a bit more rebound over there, but the downtrend has been has been in force since quite some time, and it would the dollar would really need to break above this resistance level um, for this downtrend at least to change. I'm not saying reversing, for the downtrend to change. At minimum, the market needs to break above this resistance for the downtrend to change. In the absence of a break of that resistance, the trend is likely to remain down, or the upside is likely to be capped. So that's it as far as what we wanted to talk about in today's call. Like I said, just a reminder, a gentle reminder, do feel free to join in for this free session, which is coming up tomorrow. And we'll see you over there. So thank you very much for joining on this call. Thank you. and speak to you again to the public. Thank you. Okay. Just a minute. Let me just